Micron stock investors were treated to excellent results as the company reported their latest quarterly financial figures. I'm going to go through those figures and discuss what the management team said about the company's latest quarter, why it was able to outperform, how it was able to outperform, and provide greater details about what's going on with Micron stock right now following its quarterly financial results in late June.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so Micron reported record revenue in the fiscal third quarter, with revenue, gross margin, and earnings per share all exceeding the high end of their guidance. Data center revenue more than doubled year over year, and consumer-oriented markets had strong sequential growth. So what surprised me about this statement from Micron was the consumer-oriented market, right? Because I've been reporting on the data center AI market for a couple of years now, and almost every single quarter, I report to you that all the data I'm seeing about the data center market for artificial intelligence suggests a booming market. And this is information coming from all parts of that supply chain, whether it's the hyperscalers that are making the purchases and building these new data centers, or the companies that are providing components to those data centers, and of course, the big giant in the data center, NVIDIA. And so that growth in the data center market is no surprise to anyone. Almost everyone following the stock market in the previous 2 years knows that demand for artificial intelligence is booming, right? But what was a surprise was the consumer oriented markets with strong sequential growth. These are categories like computers, smartphones, tablets, and those types of things that have been sluggish and slow to recover. Remember, there was a lot of purchases of these types of electronics during the pandemic, and since these are long-lasting goods, people are not replacing them, especially as their budgets are being pinched by the higher cost of goods on everything else they have to buy, right? The cost of food is soaring, the cost of rent is soaring, the cost of transportation is soaring, education, medical care, restaurants, everything, the cost of everything has increased by so much that people have less disposable income. And so they're holding on to their computers longer. They're holding on to their tablets longer and their smartphones longer because they don't have that extra money to throw at those things when they have to pay so much more for all of the necessities of life. So to see consumer-oriented markets had strong sequential growth was a positive surprise and one of the biggest reasons why Micron was able to outperform in the current quarter. The company also saying they generated substantial free cash flow even as they make strategic investments critical to sustain long-term growth. That's another factor I've been reporting on with Micron Technology is their large capital expenditures for future expansion and upgrading their technology. They've been spending billions of dollars in expanding and improving their technology to capture this boom in demand in artificial intelligence. Micron Technology is near the epicenter of that growth. The DRAM and storage technology it's selling is in demand for that category, so it's making investments so that it can capitalize in that area. By the way, the document I'm reading here is Micron Technology's most recent earnings call transcript, and I get these from fiscal.ai. And there's a link in the description to this site where you'll get a free 2-week trial and a discount if you're interested in reading these documents and following along. So the company saying that DRAM revenue reached a new record driven by 50% sequential growth in high bandwidth memory, and they remain the sole supplier in volume production of DRAM in the data center. In NAND, which is storage, they achieved a new quarterly record for market share across data center storage as well as client storage in calendar first quarter. So Micron basically sells storage and memory for these categories in both client segments, and that includes the electronics I was talking about earlier. And then in the data center segment, which part of the data center segment is the segment optimized for artificial intelligence. And there's also the legacy data center segments that are, CPU based instead of the newer generation data centers, which are GPU based. The good news for Micron stock investors is that the management team expects the good times to continue. Looking ahead to the fourth quarter, they see a robust demand environment and expect to grow revenue by 15% from the current quarter. So, whatever the results were this quarter, they expect them to be 15% better on the top line next quarter. So, a continued robust demand environment to be sure for Micron. And I'm happy to hear about that. Of course, I've had Micron stock rated as a buy all year long, and I last updated that recommendation following the company's earnings release yesterday. So I'm happy to see Micron performing excellently this year. Of course, I track all of my recommendations. I don't just make a recommendation video and then forget about that recommendation and never follow up. I keep track of all of the recommendations, the date I make the recommendation, and updates, and when I make those updates, whether it's a buy, hold, or a sell. I also have categories like the top 9 stocks and the best stocks to buy. I also calculate discounted cash flow valuations for the companies I'm following. And for Micron, I updated my discounted cash flow valuation for the company following their latest quarterly results. And I now find that the intrinsic value per share, or the fair value of the business right now, I see as $139 a share. The current market price is $126 a share. So I still see this business as being undervalued. So there's upside here containing to its realization of the intrinsic value. And then, of course, the stock price is still expected to increase based on the cost of capital. So even if I calculate a fair value of the business equal to the current market price, I still expect that stock price to increase um, on average every year according to the cost of capital. So if it's a business like Micron with the weighted average cost of capital of 11%, if I had calculated an intrinsic value per share of $126, I would have forecast that the stock price would increase by 11% next year. So when I calculate an intrinsic value per share that's above the market price, I expect the market price will increase by 11% plus the closing of that gap between the intrinsic value per share and the market price per share. So overall, a solid quarter for Micron Technology stock investors, a quarter that was better than expected, and I updated my recommendation for Micron stock, and I still have the stock rated as a buy. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.